Welcome to India Market Open. It's the last day of the week and it looks like there could be some Friday cheer for the Lal Street. GIFT Nifty indicating to a pretty good start. Whether it's Friday cheer consolidation is going to be anybody's guess for now.
It's not been bad at the end of a truncated week, and even globally, 3 days sort of a losing run has been snapped. But Samina, I must say that things have held out fairly well in a week where the Fed sort of gloom was there. What will they say next? It's turned out pretty okay, and most of the result season is also looking quite positive.
Yeah, I think that's the positive fallout of not being dependent on FPI flows. Yeah. Right? This market is driven by domestic investors, and very obvious, like Tamanna said, despite cues that have not been very great globally, our markets have held out, and it's largely been earnings. I mean, look at REC, PFC, case in point. You've done a good quarter, and the markets are going out to reward you.
Yeah. So markets are rewarding. Markets are also going to reward a lot of other stocks this morning, and we're going to talk about all of that on India Market Open. But let's set you up first with what's been happening globally. So the first things first, US markets have ended completely in the positive after a 3 days sort of a losing streak. Those Fed blues sort of behind the market, with Powell making it very clear that there's no question of a rate hike. When the cut will come, well, it's delayed but not derailed is a quote that I read, and that probably explains what we saw in the US markets overall. So the Dow over 300 points up, the Nasdaq up, because tech companies are gaining from a softening of the bond yields, and that's what you're seeing over there. But Apple was the star of post-market sort of coverage, because the numbers came in post-market and better than expected for Apple. Sales of iPhone have, by the way, slumped 10%, but nevertheless, the buyback that they announced has really enthused the market. About $110 billion. It's their biggest ever buyback. So Apple was the excitement over there, and there you have the Apple chart as well. Apart from that, I would say the bond yield cues have also pointed out to a fairly sort of a benign mood in that sense. The big trigger, though, of course, is going to be the non-farm payroll data, which is going to come up now. It's about 4.59, sub 4.6% on the 10-year. So that has eased off a bit. So has crude. Crude actually recovered slightly after quite a bit of a downtrend. It hit a 7-week low. Brent is now below $84 per barrel. So there's no real surprise why you're seeing your implied open looking that positive perhaps this morning. And just pull up Asia. Asia's largely opened up in the green as well, on the back of the cues that Wall Street is telling us. Implied open is what we should see, and you're looking at a pretty good start on the implied open, 113 points up. So the global setup, Samina, looks positive. What are the big sort of factors or the indications that the street is going to watch domestically?
Yeah, just one very quick mention, and this is how things change, right? I looked at an article this morning and said the yen has had its best week ever. This comes in after, of course, we all reported that the yen has been at its lowest level in 34 years. So you had a little bit of intervention. You had the Fed retaining its stand on rate cuts. The dollar, of course, weakened on back of that and gave a little bit of support to the yen. But that's how things work these days. It's either best year, best month, best quarter, and, of course, worst as well. But in terms of market action, yesterday was interesting. What we've really seen this week is that new records were made in the early part of the week, but there was a little bit of pressure at higher levels, and that led to consolidation. So what happened on Tuesday was the markets did a very sharp U-turn. Wednesday, we went into a holiday. When we came back to trade yesterday, the markets were unsettled, nervous, not really knowing what direction they were going to move in. This, of course, came in on the heels of the Fed, like Tamanna said, delaying rate cuts, not derailing it. The markets tried to find their feet, stuck in a tight range. 22,600 became an important level of support, which was not breached even once through the full trading day in yesterday's session. What stood out for us in yesterday's trade was that Bank Nifty continued to see profit taking. So they made a new record high very recently. Conversations are on about how 50,000 could be in sight for Bank Nifty. But for now, 49,231 is where we closed our trade at, with underperformance on Bank Nifty. Of course, this is going to be once again in focus this morning with stocks like Kotak Mahindra Bank. Remember, Kotak took a little bit of a backseat in trade yesterday. They also report earnings tomorrow. On the flip, stocks like Bajaj Finance could contribute well to the financial or the Fin Nifty in today's trade. So Bank Nifty will be something you want to watch out for. Broader markets have had a good run, so mid-cap stocks did quite well in trade yesterday, largely reacting to earnings. So like I had mentioned earlier, you had stocks like PFC and REC topping the list in terms of outperformers. Chola, which reported earnings, KIF and Tech, PFC, like I said, Trent, Ashok Leyland, was some of the counters in the broader markets that had a good run and contributed quite well to the index and trade. As we gear up this morning, the VIX is up quite sharply. So while the GIFT Nifty is indicating to a massive gap up in early trade, what you want to watch out for are a couple of factors. 22,800 is where you've seen maximum call OI, which means that's going to be the immediate level of support, resistance coming in for the market. So while we may attempt a move above those levels, you may see some stalling at 22,750 to 22,800. The VIX is up 32% in the last 6 days. So that goes to show you that there is a little bit of lack of direction and uncertainty on the street. Along with that, what is worth noting is some of the IT companies are done with their earnings. IT has been a laggard. You had Cognizant reporting numbers yesterday, which weren't very impressive. So tech may continue to see a little bit of weakness. But largely speaking, Tamanna, it's going to be reactions on earnings, reactions on news flow. And the broader sentiment will be range bound. But the bulls for now, I think, are feeling fairly comfortable, even though the VIX is indicating otherwise.
You know, what I find interesting, Samina, is how we are in the midst of an election, one of the hugest political events in 5 years, once every 5 years. This is the biggest political event from the Indian perspective. And markets seem pretty ambivalent about responding to what's happening electorally. Just to add one interesting cue before we get to the top stocks that we're going to watch, and an interesting update. So Rahul Gandhi will be fighting a second seat from Rai Bareli. Remember, that's traditionally the seat that Sonia Gandhi has fought and won on. She has bowed out of active politics because of health reasons. But there is no Gandhi from Amethi. So that's an interesting sort of political tidbit in the middle of this market morning. But let's get to the big stocks and the big movements you're going to expect this morning. And I have to start with Bajaj Finance. Bajaj Finance, one way or the other, is going to see quite a positive move. So here's what's happened. The RBI has lifted their restrictions on their e-com and or online digital Insta EMI cards with immediate effects. Now, remember, this is something that the RBI had imposed in November last year when there was action on a large number of institutions. The RBI was taking action one way or the other on several institutions. Bajaj Finance was among them. And those restrictions have now been lifted for Bajaj Finance. Now, that means resume sanction and dispersal of loans under this section. This is essentially your pre-loaded 2 lakh rupee loans, which Bajaj Finance was giving out, and the RBI was a little sort of circumspect about some of the details and how these loans were being sanctioned, etc. They put in this restriction. Now, the way I see it, the fact is that they have lifted this restriction within the last 6 months. And Bajaj Finance was pretty clear in its last earnings call about the impact of this. They said that we're talking to the RBI. The fact that the restrictions have come back in fairly short amount of time is also pointing out to the ability of the management to course correct quickly. Remember, no big stigma on being pulled up by the RBI because there's a whole host of banks and BFSI segment companies which have by now. So this will be seen as a positive today. I think Coal India is another one that I would look at, and Coal India in terms of their e-auction prices might be a bit of a negative over there. So in terms of numbers, profits were slightly better than Bloomberg estimates. Revenues also slightly better than Bloomberg estimates. Margins were at 30%. Revenues have come down though. about 1.95%, not too much. EBITDA seems to be below estimates as well. There's a Citi note out there which says EBITDA is below estimates on lower e-auction volumes and higher employee expenses. I think net the big concern with Coal India is that there's enough of a supply with power producers, and even though traditionally now going forward power demand will go up in the summer months, there doesn't seem to be any real shortage as of now. So maintain or expect not too much of an up move on Coal India, maybe a bit of a negative sentiment, at least initially. And likewise for a Coforge. I was interested in Coforge and, wanted to put it on my radar because even as the IT pack has been having quite an up and down, Coforge has consistently been one of the top performers, at least in terms of how its stock has done. And we should pull up Coforge in the last 1 year or so. And it's done fairly well relative to the other IT companies, and there you can see it on your charts. But the numbers have not been great. EBIT has been down 4.1% by 74 bips. Net profit is down 5.6%. So it is soft Q4, I would say, for Coforge. Revenue and margins both are below estimates. And what's important is that the management hasn't given an FY25 guidance. They haven't given a revenue growth guidance. They've suspended it due to an uncertain environment, though they expect, contracts, etc., to improve in the coming financial year. So I think Coforge might have a bit of a rough day at start as well. But a lot more stocks to talk about.
Yeah. Just very quickly, Tamanna, on Coforge, Citi actually is a sell, and what they also announced was an acquisition, which will be revenue accretive. So watch out for that one. They've paid a hefty sum, but they've acquired 54% stake in Signite Technologies at 1,415 rupees per share. This acquisition has costed Coforge about $250 million, and the revenue that Signite will bring to the table is going to be $220 million worth, which is 20% of Coforge, which is going to contribute 20% of Coforge's top line. EBITDA margins are at 14.5% for Signite, and this acquisition, as per the management call takeaways, was that it will be EPS accretive despite the QIP. They also very clearly stated that there'll be no further equity dilution. They're not looking at going out and buying any more companies. And while business for them is looking good at this stage, the fact remains that new business is coming in at lower margins. So while BFSI looked like it was in a sweet spot, the fact remains that new business comes in at lower margins, and that's what makes Citi a little nervous about Coforge. Their price target on the counter also are not looking very impressive, but the revenue guidance which was suspended was the other reason why they sold it, and they don't seem too impressed with Coforge's Signite technology buy. Along with that, a few more that we want to watch out for today is going to be smaller companies, but worth a mention. I want to start with the MOIL. The reason this one becomes important because it was up 9% in trade yesterday. From the get-go, the counter saw very significant buying that emerged and picked up in the second half of trade. The stock is up 40% this month, and the numbers are there to reflect why traders and investors have been holding on MOIL. They did increase their production by 22% YOY to 1.6 lakh metric tons, while sales for MOIL have grown by 17% YOY again. So that's what the markets have liked. Record numbers coming in on production and sales. The stock was up 9%. It'd be interesting to see if you get some more follow-on buying on the counter in trade. Along with that, RailTel Corp, and the reason I bring this up is while it may not be very large, but it's quite the theme that the markets have been excited about for quite some time now. Stock did okay in trade yesterday, but the numbers were not amazing to say the least. While the revenue was okay, it was up 25% to come in at 833 crores. EBITDA has seen a hit of about 10%. We will be connecting with the management midday to understand what led to the decline in EBITDA and the fact that margins have taken a big hit. So 540 basis points is a huge loss in terms of margins for RailTel. Reported margins come in close to 14% versus 19.39% that we'd seen for the same company. Profits, on the other hand, are up 25%. So there's a good chance that there could be a non-cash item or something outside core business that's contributed to profitability, or revenue or new business has come in at low margins. But I believe Harsh will be talking to them at some stage. We'll get a better understanding of what went wrong for RailTel. Along with that, Ajanta Pharma, Numbers were okay. It'll be good to see how the stock does. Revenues were up 20%. EBITDA was up hugely, actually, 86% higher to come to 278 crores. Margins have also improved substantially. I mean, you're looking at 26.4 versus 16.93. So I think it's not an okay number. It's actually a great number for Ajanta Pharma. And that stock could be one you want to track. Net profit also up 66% at 203 crores. So Ajanta Pharma, in my opinion, Tamanna, could be an interesting one. Small, but fantastic numbers.
Yeah. And interesting because in the pharma space, it has been quite tepid otherwise. A lot of the players have not had a great sort of quarter. So Ajanta Pharma definitely an interesting one. Just a few more. KEI Industries I thought would be interesting to look at. Their EBITDA is up 21%. Margin is also not massively up, but has stayed up about 19 bips, but profits are up 22%. Now, KEI Industries has been having a pretty good time because of order wins as well. This could be a further boost to look out for. That's one you should put on your radar. CEAT is the other one. Now, CEAT has actually seen profits come down, but that's because of exceptional expense of 58 crores. Board has recommended a dividend as well of 30 rupees per share. Their revenues have gone up, but not massively, about 4%. EBITDA is also up about 6.5%. So tepid numbers, and at a time when auto is definitely on top of everyone's radar. So might not see a very positive reaction for CEAT. Keep an eye on that. The other one, again, from the same space, CIE Automotive, and the numbers look quite negative on the face of it. Revenue is down, not massively, but about 0.5%. EBITDA is down 5%. Margins have also dropped slightly. Net profits down about 17-18%. So expect a bit of a downer over there. Just Blue Star, one more, and again, we'll be talking to the management. One which we should watch out for, because this is traditionally a good quarter for them. Blue Star has been doing well, but their profits have come down about 24%, even though their top line is looking decent, and so are margins. So we'll have to wait and see what the reasons for those are.
Yeah, I'll just add to that list, and these are good numbers. So I'm just like Ajanta, it's going to be Aztec Life Science you want to track in early trade this morning. Revenues were up 21%. EBITDA was up 136% to come to 12 crores. Small company, like I said, but again, good earnings coming in from their stable. Margins were up 500 bips to at 8.5 versus 4.24. They did post a small loss of 96 crores versus a 5 crore profit. The estimation of Bloomberg was about 1 crore, so more or less in line with that. So on top line, while the numbers have looked okay, very obviously we've seen some pressure on their bottom line. Yes Bank, watch out for this one. We will of course know exactly at 9 between in pre-open trade what's going on. But if there are reports to be believed, Carlyle is looking to sell 2% stake worth 1,500 crore today, 1,500 crore rupees today in Yes Bank. Remember, in Feb as well, they'd sold 1.4% stake in Yes Bank worth 1,057 crores. CA Pask Investments, which is a Mauritian-based SPV, had sold about 39 crore shares at 27 rupees a piece. So this will be active. It'd be interesting to see who picks up this stake sale or the stake that Carlyle is looking to offload. Along with that, another smaller company but worth mentioning is Ugro Capital. Their profit has come in. They've actually reported a pretty good set of numbers, 133% uptick in the March quarter. But what's important to note is that they've acquired or looks to acquire fintech lender MyShub Life for about 45 crores. They are also looking to raise about 1,333 crores via CCDs and warrants. So this one also should be on your radar. The stock gained quite sharply in the last half an hour of trade and could be one that continues to see activity as we see it this morning. So I think more gainers than losers, at least in terms of reporting earnings.
Yeah, absolutely. Just for non-earnings pace, Mazagon Dock, maybe you should talk about is they've got an international shipbuilding order worth 42 million to construct 3 hybrid powered vessels. Not too many details right now on who that order is for and where, but Mazagon Dock definitely one which pops up now and then, so could be interesting today to watch out for. But let's get to the big stock this morning and the big story this morning, which is on Bajaj Finance. This sort of revival of restrictions or the lifting of restrictions by the Reserve Bank of India definitely been seen as a positive. Now, we're going to look at it from two angles. One, what Bajaj Finance has been saying, what the RBI has done and why they've lifted the restrictions. And we're also going to be looking at it in terms of the financial aspect and what the impact really is going to be positively for Bajaj Finance. So let me start with Pragati and Harshpur joining us. Pragati, let's begin with what exactly the RBI had done and give us some context about why these restrictions were placed in the first place in November last year.
Good morning, Tamanna. Yes, on Thursday evening, RBI lifted the curbs from Bajaj Finance. This is two products, that is the Insta EMI and the e-com cards. The Insta EMI card and e-com products both were a big hit among the customers. In fact, the curbs were lifted with immediate effect. That's what the company informed us via the stock exchanges. In fact, it said that not just the sanctioning and doling out of loans has been restarted among on these two products, but also the issuance of new cards has been restarted. Now, the development comes after the lender had submitted its request to the RBI for the reviewing of these curbs. The timing is actually very interesting and significant here, because in the past, whenever we've seen business curbs being put on companies in cases of HDFC Bank, IIFL Finance, Paytm Payments Bank, and so on and so forth, we've always observed that it takes the regulator at least 12 to 15 months to lift those curbs. But in this context particularly, just in about like 5.5 to 6 odd months, the curbs have been lifted. So definitely it becomes a positive for the company. But let me bring in some context as to why the curbs were put in the first place. Now, as our viewers can see, the curbs were placed due to the non-adherence to certain guidelines, and the curbs came into effect in November 2023. In particular, it was the non-issuance of a key fact statement to the borrowers and also some deficiencies in the key fact statement. That's what caused the curbs to be put in the first place. Obviously, there was some business impact as well, and a significant impact was felt in the fourth quarter numbers because the new loans that were being booked was significantly lower. In fact, while there were about 4 crore EMI cards in force as of September 23, that's the last figure we had before the curbs were placed in November. After that, if we have to see if we can bring the numbers here once again, as we said, that the new loans that were booked were just at about 7.8 million. These are the quarter 4 numbers that we are showing our viewers. They were up just about 4% on a year-on-year basis. Quite a significant impact, clearly showing that a lot of business was coming from there. Harsh, why don't you run us through what other impact you are assessing and what the brokerages are in fact making of it now?
Sure, absolutely, Pragati. So just picking up from where you left off, 8 lakh odd loans is what Bajaj Finance missed out on in Q4 in terms of growth. 12 lakh overall in FY24. So while the numbers in terms of number of new loans booked looks large, as component of the AUM, it's not as large because it's just about a 4% impact on profit before taxes as of Q4 FY24. That's what most brokerages are saying. Also, in terms of the biggest positive here is the fact that it's the issue has been resolved in 5 months. This, and I quote Citi on this, is commendable in their words, and that could possibly be the key positive on the stock, even from a sentiment perspective. So let's pull out what Citi is saying. What they are saying is this 5-month rectification of deficiencies is what is commendable. That's what they are saying. The other key takeaway is that they believe that in terms of the guidance, things will start to get front-ended and the guidance will go towards the top end of the band. Now, mind you, 2 metrics on guidance. AUM growth, 26 to 28%. What Citi seems to suggest is now AUM growth has been switched over to more on the top end of the guidance, 28% likely. The other piece is what Pragati correctly pointed out is with regard to customer acquisition. 1.2 to 1.4 crore customers was the guidance. Street not happy about that, which is what the reaction on the stock price suggested. And therefore, what Citi believes is that that will also be at the top end of the guidance. So around 1.4 crore customers likely to be acquired in FY25. Given that this has happened so early in FY25. Citi obviously positive on it, 8675 the target price, 26% upside here. MK on the other hand seems to suggest that the re-rating will also be from an earnings standpoint, which is a positive. Of course, the embargo lifting so quickly is a positive surprise in itself from a sentiment perspective. Likely a reaction on the stock. 4% of PBT was the Q4 impact. That will get reversed starting probably Q2 FY25. So plenty of positives in the near term, which were negatives just about in the short to medium term, and that's what's probably going to drive the stock price. MK has a 9,000 rupee target price on this one, 31% upside.
Yeah, all right. So Bajaj Finance definitely there on the radar today. Thank you for that, Harsh and Pragati, breaking it all down for you. Now, the other sort of big development, and we are in the middle of election season, but Congress leader and Wayanad Member of Parliament Rahul Gandhi will be contesting Lok Sabha elections, this time from Rai Bareli, second seat. Remember, he's already contested from Wayanad, and polls have already finished in phase 2 in Wayanad, but he's now filled up his ticket from Rai Bareli as well. And Congress's Kishori Lal Sharma will be contesting from Amethi. NDTV Sunil Prabhu joins us with more. Sunil, there was a lot of suspense about this decision, that will there be a Gandhi contesting from Amethi? Will Priyanka contest from one of these seats? And who will contest from Rai Bareli? Tell us what this final decision, what's the indication it gives us in terms of confidence of the Gandhis?
Well, it was, as you rightly pointed, down to the wire. Only this morning, the official announcement has been made that Rahul Gandhi will contest from Rai Bareli. The fact is that the Gandhis were extremely diffident to contest from the Gandhi strongholds, or what was perceived to be their strongholds in Uttar Pradesh, Rai Bareli and Amethi. Priyanka Gandhi Vadra was urged, appealed. A request was made by the Congress president, no less, Mr. Karge, till late last evening after he had a meeting with Rahul Gandhi, wanting both of them to contest from Amethi and Rai Bareli. But finally, given the ground level situation, he left it to them to take a final call. It's now been decided that Rahul Gandhi will shift from where he lost last time, that is Amethi, to Rai Bareli, where his mother has vacated and joined the Rajya Sabha from Rajasthan. So he will be contesting from there. And the constituency manager, KL Sharma, who has really been looking after both Rai Bareli as well as Amethi for Sonia Gandhi as well as the Gandhi family, has now been nominated to contest from Amethi. So that's the backdrop. After a lot of persuasion, finally the Gandhis have revealed. The big question now will be, if he does get elected from Rai Bareli, will he keep the seat in Rai Bareli or give it up? Or which will it be? Either Wayanad or Rai Bareli.
So he will have to give up one if he wins from Rai Bareli. But tell me about Kishori Lal Sharma, Sunil, if you can, because now he goes up against Smriti Irani from the seat of Amethi, and that has been a sore point for the Congress and the Gandhi family, right? When Smriti Irani won Amethi and won it again, and which is why who the candidate from Amethi is also becomes very important. So is this now a tough fight, or how is it seen, Smriti Irani versus Kishori Lal Sharma?
So, first of all, Smriti Irani contested in 2014, lost against Rahul Gandhi in 2019. She recontested and this time won against Rahul Gandhi. So it's in this context that Kishori Lal Sharma now emerges. He's been somebody who's been looking after the constituency for decades. He's a family loyalist. The last time round, somebody has contested who has been a non-Gandhi has been Satish Sharma. After Rajiv Gandhi was assassinated, he contested from Amethi, and it's in this context now that it is. An election is a contest till it is till it's not. We'll have to wait till it's finally over. But definitely, a lot of homework will have to be done in Amethi, in Uttar Pradesh, in particular. It's a tough fight for the India Alliance against the BJP, and it's in this context that we are seeing this huge, battle of nerves in the Gandhi pocket boroughs, which used to be at one point of time a cakewalk for them. Now it's becoming extremely difficult and not a fortress anymore for them.
That fortress has definitely been lost. Rai Bareli now is the next question. Thank you for that, Sunil Prabhu, and for joining us for that quick political update as well. We'll take a short break, but on the other side, Agam joins us with the entire F&O setup.
Welcome back. This is India Market Open. Well, we're taking stock of how things are panning out in the futures and options space. It was a relatively quiet expiry yesterday, and the Nifty advanced by around 0.2%. And along with that, what we did see was a little bit of an increase in open interest as far as the May futures go, up around 2.5% to what looks like fresh longs at the moment. But it was quite a very different picture when it comes to the Bank Nifty. The Bank Nifty, in fact, came off by around 0.3%, and there was unwinding in open interest to the tune of around nearly 4%. Well, in terms of the options market going in, considering the fact that we have seen increased activity around the 22,600, 22,700 mark, we saw a considerable amount of writing in both those calls and puts around the 22,700 strikes. Where does that leave that in terms of your overall open interest distribution picture? Well, we do have significant amount of open interest distribution around the 22,700 calls as well as puts, though a lot coming through as far as the 23,000 call is concerned as well. And of course, in the lower end, also keeping an eye on the 22,500 put. That's the rough range that we are working with as far as the weekly options go moving into the next few weeks, or rather next few days. Now, in terms of stocks, we did have plenty of reaction in terms of earnings. Shorts for Hindalco, Coforge, IGL and Pidilite. And REC, of course, looking at fresh longs, and a lot of unwinding and about a short covering, in fact, for Canfin Homes, Tata Chemicals, Federal Bank, Shriram Finance and Biocon. So it was a mixed day of trade. the question really is that what do we do with these factors going in? Well, let's get in an expert for now. We have Amit Goel of Amit Ventures who's joining us on the show. Amit, good morning. Thank you so much for joining in. Let's start with your assessment on the benchmarks, the Nifty specifically. What's your view here, and what kind of an option structure are you deploying here?
Yeah, hi, good morning, Agam, and good morning to all your viewers. Nifty has been in a structural bull run, and every week that we meet, have essentially advocated the fact that it is a buy on dip opportunity, and we have seen a good new all-time high on Bank Nifty as well. From next week's expectation, what I'm looking at is, I tend to agree with you from the options chain. 22,700 seems to be a tug of war situation, with 23,000 on the upside facing, acting as a resistance, and 22,500 as a support. So I don't expect any tearaway rally in the market as of now, because there are no major data points hinting to it. Even the FOMC meet was kind of a non-event for the markets. So what I would expect to do is, I would expect to play on the theta decay aspect and set up a short strangle in Nifty, wherein I would like to sell 23,000 call, and I would like to sell the 22,400 put. I'm just being a little careful on the put side, because we all know that when the markets fall, the IVs tend to rise. So I'm looking to make a short strangle with a combined premium of about 2,000, 2,200 rupees. The exit for this trade will be very, very strict. I breach of either of the levels, we should exit the trade. I'm aiming to make about 1,500 to 2,000 rupees on this trade. And, I don't advocate anybody to be in this trade on Thursday, which is the last day, to, milk that final few points, simply because of late what we have noticed is there have been a lot of spikes, a lot of unnatural spikes in the premiums, and which could cause a runaway a run on your mark-to-market losses. So I would advocate people to exit the trade on Tuesday or Wednesday latest, and not be on the expiry day to milk that final few points.
So, well, that's the view on the Nifty. Amit, moving on to the Bank Nifty, what's the view and what's the way forward?
Yeah, Bank Nifty did give a smart rally in the last week, but it tapered off kind of after printing a new all-time high at close to 50,000 levels, which was essentially my target when we met a couple of weeks back. The kind of rejection it has faced there, forming a shooting star sort of a formation on the candlesticks, along with the confirmation yesterday, tends to give me some bit of insight that probably 50,000 and 49,500 could act as strong resistances in Bank Nifty until and unless there is a key trigger. So what I would like to do in Bank Nifty is play a little bearish to sideways sort of a trade, wherein we could look to sell the 50,000 call for the next week's expiry, which will fetch us about 2,000 rupees, and we will keep a rupee stop loss here of about 2,000 rupees. So any breach of 49,500 or 700 levels on at least a 15-minute time frame should trigger our exit here. So I'm a little sideways to bearish on Bank Nifty, while more neutral on Nifty.
Okay, fair enough. So that's your view on two of your key benchmarks. But moving on in terms of stocks, Amit, what do you have on your radar?
Yeah, so I'm trying to play a slightly contra game here in FMCG major, which is Asian Paints. Asian Paints has been, on a momentum, on the upside momentum in the last few sessions, primarily led by, softening of crude prices also. Though the results are very close by. I am I suspect this rally probably would not last long because I see on the charts a fair bit of resistance at about 3,000 and 3,050 levels. With results around the corner and the overhang and the headwind of Grasim entering the paints business also continues to be a dampener for this stock. So I'm not very bullish on the stock, and I suspect that this rally might not last long. So the way I would initiate is, and even if you look at the option chain, Agam, 3,000 level has seen 3,000 calls have seen an addition in spite of yesterday's up move of about 3.5%. So this tends to, I tend to believe that probably this would, get faded away. So what I would like to do is, if I see that during the day today, if there are more additions in this call and the resistance getting built up, then I would like to initiate a put butterfly. It's a limited risk strategy. I would advocate all traders to initiate limited risk strategies in stocks, because news flow is very strong, and you could have very strong opposite gaps also. So what we would like to do here is we would sell two lots of 2900 puts and buy wings of 2800 and 3000 one lot each, giving a max risk in this trade of about 3900 by expiry of this month. So we have enough time to be right, and I would like to start off with trailing a profit of about 4,000 rupees and trail from there for a little bit of more profit. So it's a limited risk, slightly bearish to sideways sort of a view on Asian Paint, Agan.
Well, a very comprehensive strategy on Asian Paints as well. Remember, the stock has been on a little bit of an up move, and we already know that there was a little bit of a resistance around 29.50 and thereabouts. And now that the stock is starting to move upwards, of course, that's one of the themes that Amit is also looking to work around as far as Asian Paints is concerned. But on that note, Amit, pardon me, we're taking a moment to thank you for joining us and taking us through your views on the benchmarks, as well as giving us option structures on Asian Paints. And with that, it's over to you, Samina.
Thank you, Agam. That was the view on the markets and a couple of trading calls coming in from Amit. But the sector in focus is going to be the tech space. It's been on the sell side for the last couple of days, and it's Coforge that reported numbers that were a huge disappointment. They've made an acquisition which brokerages don't seem too enthused about. And more importantly, you also had Cognizant reporting its first quarter numbers for FY25. Numbers were, of course, lower than expected, but better, or on the outer end of the guidance, which actually helped the stock in terms of performance. Apurva Prasad, Institutional Research, IT, HDFC Securities now joins in. Apurva, we wanted to understand from you what the IT sector is looking ahead at in FY25. But before I go into that, a quick word on Coforge's earnings. I think a few positives are that they've picked up a few deals in the BFSI segment, but most of these deals are coming in at lower margins. So margins is a pressure, non-committal in terms of conclusive deals being done. And more importantly, the acquisition of Signite Tech. I know Jefferies believes that they should have done an acquisition in the new tech space. How do you feel about both of these, and what's your call on the stock? Have you gone back to revise your call on the counter?
Hey, I don't have a rating on Coforge, so can't really comment on that. But I think the idea that the company is really going forward is to move towards a 2 billion target by FY27, which is what they have stated out. So I think it's getting that. But broadly, I think some of the factors, if you see in the sector, that persist pretty much, whether it is in terms of discretionary being softer or deals that are taking longer to ramp. We've seen that with some of the larger companies, Cognizant that you were just mentioning. They held on their guidance, and I think some of the factors are pretty much similar to the concerns that were laid out the last 2 quarters. So I think that pretty much status.
Purva, I understand that it's probably par for the course as they look to, of course, hit that revenue number. But a couple of other important, news developments that have happened at the start of the new financial year, and it's LTTS that I want to pick up on. Numbers were disappointing. Street was not excited, but they've come out and announced a pretty significant deal to the tune of $48 million. And it's a 5-year deal, I believe, with an automaker in Germany, start of many more deals, and, of course, opportunity to increase wallet share. I'm assuming the stock will be one that investors would like to know what to do with. Do you have a coverage on LTTS?
Yes, we do. I think that certainly adds revenue visibility to the company. I think more importantly, the deal that they signed a few months back, the cybersecurity deal in Maharashtra, I think that does give them good incremental revenue. I think which is what could potentially the 8 to 10% that they've guided for FY25 looks fair certainty with some of these deals. Our concerns on LTTS is more on margins, because some of these deals coming up, or just the change in business mix, is having implications on their margin profile. The company is expected to get back to 18% plus, but I think that's going to take a lot longer. And if I look at the fact that where margin profile currently is headed to for the next few quarters, the valuations are not something that we are comfortable. But yes, I mean, the short answer to your question is that the deal does add visibility to the company to deliver the 8 to 10% guidance.
Yeah, hi Apurva, good morning. Tamanna here. I just want to take the conversation a little forward looking, and let's base it off Cognizant numbers which came in. We're looking like we're set for maybe another rough quarter for IT companies, and Cognizant sort of heralding what is in store for our big names as well. Would you say that's a fair assessment? And those same problems persist. Deal wins not really translating into revenues, the overall sort of environment being a bit of a dampener. Is there more of the same in store from what you've seen so far?
Yeah, so I think it's a bit of that, and it's a bit of also the relative competitive factors, because Cognizant has underperformed a big way to Indian IT last few years. So how much of this is really reflection of market versus the competitive swing? Because I mean, let's not forget that for most of these larger companies, there is senior management changes that has been very recent. So the competitive factors only got a notch higher. And the environment is pretty much where it is. But I think Cognizant did highlight some green shoots in the BFS sub-segment. And that's a segment that they were impacted. We've also seen some of the larger Indian IT companies talking about BFS bottoming out. So I think the comparable is going to be favorable. So I think that is what allows most of these companies to accelerate gradually as compared to FY24. So we do expect a slight acceleration. So I think we're confident to say that growth is certainly bottomed out, but the rate of acceleration is something that needs to boost.
So, Apurva, I take your point that Cognizant has underperformed Indian IT majors, so it's not necessarily that what we see from Cognizant is what we'll see with the rest. That point is taken. But what about the issue of large clients and squeezing down on discretionary spends? Whatever is being spent is now more focused on AI-backed solutions. How do you see that panning out? And if I were to ask you what Q1 is looking like for Indian IT and for, say, the top three, what would you say?
Yeah, so I mean, we are building in a relatively softer Q1 for Indian IT. This is some of the more recent deal flows, and I think the discretionary environment that we discussed hasn't changed too much. The translation from pipeline to bookings and bookings to revenue, some of those ebbs and falls. I think that's likely to be weaker than the normal Q1 seasonality that we see. So that's what we're building in. There were a certain set of assumptions in terms of discretionary at the beginning of the year. I think some of those have dissipated with the anticipation of negligible rate cuts now. It's probably correlated to that. But yeah, I think the benefit is going to come because the base will start to get favorable. So it's a bit of an arithmetic there. But think of it like this. I mean, a CQGR growth rate, a quarter-on-quarter growth rate, which can be similar even for next year, and yet growth could accelerate from 8%. So I think the near term is likely to be weak at an aggregate level.
Right. Very lastly, Apurva, your top pick in the IT sector from the large cap names and one from the mid and small cap.
Yeah, so TCS is what we like within the larger ones. I think the execution track record, relative outperformance and growth, and most of the advantages persist. So we like TCS within the bigger names, and within the mid-tiers, we like persistent systems. Continue to lead with upside potential and margins, provide superior earnings growth relative to peers.
Thank you so much for that, Apurva. So if I heard you correctly, you like persistent systems, is it?
Yes, persistent systems.
Okay, and between the top three, what's your ranking? Infosys, TCS, Wipro?
TCS, Infosys, Wipro, we have a reduce.
In that order?
Yeah.
All right, in that order. Thank you for that, Aditya. They're talking about the tech pack. Another tough quarter up ahead is something that you can expect. But also, I thought one interesting takeaway is that all things cognizant is not necessarily telling you what is going to happen for the Indian IT space. Kush Bora, founder of kushbora.com, with us this morning to help us look at the charts and pick the right stocks. Technically, Kush, very good morning to you. Great to have you here as always. Let's start with your Nifty and Bank Nifty take.
Hi, Tamanna. First, a very good morning to you and everyone on the panel. Well, the way I would summarize the texture of the market currently is 2 steps forward and 1 step back. This market has been giving you those dips to buy regularly. It's also giving you that opportunity to go ahead and book profits. But it's imperative that you book those profits because the kind of volatility we've seen, you might see some sort of losses if you can't really handle the volatility, and the dips also have been sharp. But I think the strategy that is playing out is 2 steps forward and 1 step back. So every time you get that step back, it's a good idea to go ahead and buy. I think 22,800 and 23,000 on the Nifty are very real targets. 50,000 on the Bank Nifty. But what's interesting is that there could be a near-term top for the market, and depending on the election outcome, it could be either just before or just after. So that's something that I'm a little watchful about. So from a positional standpoint, the risk-reward ratio is not favorable for taking a big position on the market, but the kind of momentum that we are seeing and the kind of moves that we've been seeing on the market, I think it's a good idea to stay long. The gap up that we are seeing today will perhaps eat into most of the gains that you could have had today. So I wouldn't chase the gap up. If I am carrying any long positions from yesterday, I'll book them and perhaps start my weekend a little early.
Okay, so start your weekend a little early, maybe TGIF mood, and overall long positions make sense this morning. What about your picks, Kush? What would be your top picks right now?
2 of them from slightly different setups. One is BSE. Now the stock was on a tear away, rally, and we would want some sort of a pullback. Perhaps not the kind exactly that we would have liked, and not on the news that we would have liked. But I'll take it with both hands. The kind of tip that we've seen, just bringing the average cost price lower for me. So BSE is something that we would suggest to have in your portfolio if you didn't up until now, or if you did, not a bad idea to add some more. So Bombay Stock Exchange is that is a stock that we're looking to add at current levels. 2950, 3050 are the near-term targets. 2750 is where I would place my stop loss. Also happens to be a medium-term support zone for the stock. The second one is Hind Copper. Here the stock's been on a rally. We're seeing some sort of a consolidation, but I think after this consolidation, the stock is ripe for a move past 400. So from a near-term, 398 and 405 are the targets, and 385 is where I would place my stop loss.
So Hind Copper and BSE. BSE is an interesting sort of a bet because after quite a slam dunk post the SEBI regulation and the SEBI sort of demand on regulatory fees, it saw a bit of a recovery. Vineet Bulinshkar joining us this morning, Head Research, Ventura Securities. Vineet, great to speak with you. Welcome. Let me begin by getting your take on Bajaj Finance. How much of an upside do you see, and how much of an actual impact on the top line for Bajaj Finance now that RBI has lifted its restrictions? Would you say that this is largely going to be sentimentally positive?
It is sentimentally positive, but it's not going to add too much of growth to the counter. So we don't, while this is positive and, the company will make great headway because, one large incumbent, that is Kotak, has been put on the, on the back burner. So I believe that Bajaj Finance will still be range bound until they can materially show some kind of back to growth, aggressive growth kind of trajectory. Because if your growth are declining, your PE multiples are very high, and then they are going to adjust if your growth is going to slow down. So we would like to see from Bajaj whether in the coming quarter they display a kind of a rejuvenated growth in AUM.
Kush, what about your take on a Bajaj Finance today?
Let me just put the disclaimer out that I still have some holdings, of this stock in my portfolio. I've pared them significantly. And, I think last week or perhaps before that, I said that Bajaj Finance put is a trade that continues to give. So for now, till the level of 7,300, perhaps 7,350, once that is taken out meaningfully, perhaps I will reconsider changing my view. But in the near term, any kind of bounce that I get will perhaps be an opportunity to go fresh short. So I am not too constructive on Bajaj Finance move from here on, especially if I look at the comparison. When I have the likes of Geo Finance, where the potential for returns is now significantly higher, perhaps something like what Bajaj Finance has done over the last decade or so, then perhaps the tilt towards something like a Geo Finance is a little more. Bajaj Finance on rise is it's a sell on rise kind of a setup for me, at least at the moment.
All right, Bajaj Finance, you would say, let's move away. Another stock, Vineet, that I'd like your view on, and numbers, maybe a tad below expectations would be Coforge. We had a conversation right now on the whole IT space, and Coforge definitely was one of the weaker ones. Would you say that this is a space that you'd stay away from, and any specific take on a Coforge?
So I think it's it's a very mature industry now. And while there is great expectation that AI would add to their revenue stream, what is going to happen is that although the digital and AI is going to build up, the other segments are going to drastically slow down. So we will continue to see this flattish kind of growth across the segment. And hence we are not very, very comfortable owning this sector completely. I have been staying away from software services for almost 5 quarters. And we continue to hold that view. However, one stock within this space which could buck the trend is Persistent. They have got a very, very strong, aggressive growth guidance. And we believe that they can outperform the sector quite well.
So Persistent still remains your top pick. This was something mentioned by the IT analyst we also spoke to. But, on Coforge specifically, we may see a downturn today. Would that be an opportunity, Kush, to accumulate?
Not at all. The stock has been under some serious pressure, broken below its, key support zones. A 200-day moving average was broken, some time back, so that really doesn't hold. Even the key support zone, which was close to 5100, 5050 levels, was also taken out. There isn't really much suggesting that turnaround is on the cards, even if the stock opens lower today. Still some distance from the oversold territories also. That too perhaps will add to the fact that you won't see any kind of a revival anytime soon. So perhaps a 4800 kind of a level is something to watch for. If we come close to that, then depending on the setup, we might consider maybe a contrarian trade only for a dead cat bounce sort of a trade. But then why venture into something as risky right now when you've got plenty of other options in the market which are trending much higher.
All right, so Coforge is an avoid. Persistent, any view, Kush? Since Persistent seems to be name cropping up again and again in this IT space. Would it be on your radar if you wanted to come into this space?
So, Tamanna, I agree with Vineet for the most part for this sector. The most part of the commentary for this sector, and Persistent also I agree to some degree. It's just that the price action right now is not comforting for me at all. I'll wait and watch. Let's say for another week, maybe 10 days. The stock is close to the 200-day moving average, and barely holding on to it. So if we see some sort of a revival from here on, I'll perhaps go in and buy from a positional standpoint. At the moment, I will just wait and watch. The entire sector has been under pressure, and while Persistent remains our top pick, we've seen a serious price cut, or rather a downward price action in Persistent also. So my pick in this space is actually KPIT Tech, and that's the stock that I will accumulate on dips as well. Persistent for sure, one of our favorites, but I'll just hold on for some time to go ahead and accumulate.
So tech, if you're looking at tech, KPIT Tech is the top sort of call as per charts by Kush. Persistent is another favorite. Time for a short break, but we'll be right back with not just pre-open rates, but a closer look at the auto sector as well. Auto numbers are out, a lot cooking in this space and a lot revving in this space. We come back with more after this very short break. Welcome back. Less than a minute to go for pre-open rates to hit. You're watching India Market Open. I'm Tamanna Inamdar, and with me is Agam Vakil. We're talking auto now for the next couple of minutes. Auto data has come in, sales data for the month of April. Jay Kale, Senior VP Equity Analyst, Auto and Auto Ancillaries of Elara Capital, is joining us now on the show. Jay, very good morning and great to have you on. Let's begin with the sales numbers that we saw. And auto has been on a complete tear. If I were to break up two-wheeler and passenger vehicles, how would you rate the two?
Yeah, good morning, Tamanna, and good to have, thanks for having me on the show. Also, on the passenger vehicle and two-wheeler side, if I have to break it up, if I have to see the core retail growth, and I would like to assess the core retail growth based on March plus April on a YOY basis, because there has been a shift of Navratra this year. Two-wheelers continue to, tread the strong double-digit growth, they're close to around 17-18% on March plus April YOY growth. Whereas passenger vehicles have been a little sluggish in terms of growth, around 4 to 5% on the retail side. On wholesale side, of course, two-wheelers again are pretty strong at around 20-21%, and passenger vehicles are lower. Going forward, I think in May specifically, there are lesser number of marriage dates this year versus last year. So growth will moderate significantly. But overall, if I have to think about March plus April plus May, the growth should be good for two-wheelers, followed then by passenger vehicles space.
All right. In passenger vehicles, you've spoken about, and I was reading your note, you've spoken about how Maruti and M&M are your best picks. Now, I'm wondering why, considering they've both run up significantly. In terms of valuations, do you still see potential here?
Yeah, I think, yes, they have run up significantly, but, different, both of them have different levers in terms of, positive narrative. If you see M&M, I think there are a few new launches expected in this year, and their last couple of years launches have been quite successful, and that has aided them to have the highest market share gains in the last 1.5 years. Same with Maruti. I think Maruti's new launches have done pretty well, and their acceptance in the 10 to 20 lakh price category has been quite good. What has hampered them is the stress in the first-time car buyers, which we believe overall, over the next couple of years should come back if the passenger vehicle industry growth story is intact in India and with the per capita incomes improving. So overall, I think, the core penetration levels of India passenger vehicles is quite low. And Maruti and M&M with their strong product profile are the best plays from a medium term in terms of high growth profile. Plus, the margin profile has also been quite satisfactory in the recent quarters. So you should see close to a 15 to 20% earnings growth for these companies going forward, which will be supportive of valuations as well.
Right. Jay, good morning. My question is to do with tractors. At the moment, what we're seeing is a curious divergence between Mahindra and Escorts. Now, if you just consider the month-on-month growth, Mahindra's growth has been 47% as against 10% of Escorts. Is there a reason behind this divergence? Is there anything that stands out for you here?
I think, tractors, it's very, I would not want to see the month-on-month growth because it's quite seasonal. There are shifts of inventory, addition, deletion, what each company, takes. There is some seasonal pattern as well because Navratra is more prominent this time of the year. Navratra is more prominent in the northern regions, etc. So I would be, I would like to see tractors more from a, at least a 6 to 8 month perspective. And tractors historically also, if you see, the market shares have been quite sticky in this segment. While many of the players have tried to do a lot of interventions, product interventions, market interventions, but market shares in tractors are quite sticky. So our view, we need to take a call on the tractor cycle rather than any market share differences between one player or the other.
All right. Well, Jay, what's also been very reflecting in the stock prices is the volumes for two-wheelers at the moment. Of course, TVS Motor Company clearly an outperformer, but we haven't seen something like a Hero MotoCorp or for that matter Bajaj Auto, well, take a step back. What's the way forward? Your preference in this list, and let's not forget Eicher Motors either.
Yeah, I think TVS Motors has had a stellar kind of run in terms of both volume, market share, margins, as well as stock price movement. And I think going forward, one would expect that trend to continue. We will see a few new launches coming in from TVS Motors. And mind you, in the last year, there were not many new launches that TVS had, and still they increased their market share on a yearly basis. So, two-wheelers is a more of a sticky product brand, industry. So once you have a successful model, it runs for quite some time, and you don't need as many product interventions once you have 2-3 products that are sticky with the customer. Preferred picks would be Bajaj and TVS in the two-wheeler space.
Right, Jay. Then let's talk about the other big theme that is, potentially on the cards for India, and that's the new India EV policy. We have all sorts of news coming around Tesla, though nothing specific with respect to it. Still, there's a possibility of a lower duty coming in as far as imports are concerned. Surrounding these themes, what analysis, what assessment are you making at the moment?
I think, we need to see how this pans out with the new entrant coming to India. Of course, the government has laid down their policy and has made it quite attractive for players, not only for Tesla, but, the others as well, to kind of get their act together in the EV ecosystem in India. So it will be interesting to see how, the global players try and capitalize on this EV policy and try to make a mark in India. Not many global players have been successful in the ICE category in India. So I think, the EV category will be an interesting thing. But whatever happens, I think the policy is good from developing the EV ecosystem in India. So, that's something that is important, because passenger vehicle EV market is quite large globally. In India, it's still in a nascent stage. You still have penetration hovering around 2.5%. And this space is expected to be seen from a medium to longer term perspective, and not necessarily from the next 1 to 2 year perspective. And I think entry of new large global EV players in India, if at all it happens, is definitely good for the overall EV ecosystem, and it will be positive from the overall ANGs as well as the OEM space.
Yeah. Jay, just wanted your take on JBM Auto numbers. On the face of it, looks fairly good. Ahead of open today, would you say this is definitely a pick, or how would you assess the numbers that have come in? It's already doing fairly well pre-open.
I think JBM is definitely a play on the EV buses. They've garnered quite good orders on the EV buses side, and they're doing a lot on the electrification, components, etc. Currently, we don't have any coverage on JBM Auto, and hence would not want to give the stock view on that.
The profits are down, 62% margins contract, but overall, the stock has seen a good at least a response in pre-open because the operating margins have been fairly stable. Just broadening the scope of what we've said, and we've taken your top picks, Jay, as far as two-wheelers are concerned, but in the passenger vehicle space, what would be your top couple of picks? And also in auto ANGs, I wanted a view from you on Exide as well, if it's on that list at all.
Yeah, I think from the passenger vehicle space, like we mentioned, we have Maruti and M&M as our preferred picks in the passenger vehicle space. And in the ancillaries, our picks are, Samil, Sona BLW, and Uno Minda. And yes, Exide has done well to get the orders from the Hyundai and Kia that was announced a few days back. And that actually opens up the passenger vehicle lithium-ion cell opportunity for players like Exide, which earlier probably, the street was a little more apprehensive of that whether they will be able to crack that. This definitely is a positive development for Exide, and people will now start valuing the lithium-ion cell facility of Exide a little more favorably than they were doing earlier. Currently, we have an accumulated rating on Exide.
All right. A final question from my end, Jay. We have an impending IPO from Hyundai. We are expecting an valuation of around $22 to $28 billion at the moment. It does seem like it's at a significant premium, but does that mean that we could likely see some of the other PV players like Maruti potentially see a re-rating on this account?
Yes, I think partially that is kind of playing out in the last post the news of Hyundai's IPO. The valuation multiples of the other passenger vehicles have been seen favorably. That is definitely a possibility, but of course it all depends on the valuation of Hyundai, what it eventually comes at, and all the nitty-gritties around it. But in the lead up to that, definitely, we have seen that positive rub-off effect for the other passenger vehicles.
All right, thank you for that, Jay. Great to have you with us here this morning and that extensive conversation on the auto space. Just a quick look at where pre-open rates have settled before we move on. I just want to pull up Bajaj Finance because that is the stock this morning, and the stock, at least in pre-open session, is up about 6.5%. So is Finserv. Hindalco is looking good. The auto pack definitely shining, and M&M was one of Jay's top picks. It's up in the green, at least in pre-open rates. But a lot more to talk about. Let me quickly go across to Harsh, who's picked the top brokerage reports to focus on. Yes, Harsh?
Let me start off with Adani Ports. Came out with numbers yesterday. Bernstein has come out with a report lauding the numbers in a certain sense. They continue to maintain their outperform rating. What they are suggesting is that the numbers have beaten guidance on pretty much all metrics, and despite a higher capex of around 7,400 crore which Adani Ports has done, they've done very, very well with regard to their debt. So their net debt to EBITDA is now below the 2.5 times mark. Also, they believe that given that it already handles half of the countries, in terms of a country the size of India, as large as India, is what they reiterate. Despite them doing that, they believe that there could be significant volume upside going forward as well, and they continue to deliver well on volume growth. The FY25 guidance that the company has given, largely in line with what Bernstein estimates suggest. Target price 1,500, roughly a 12% upside from here. I want to switch over to Coforge. That's the other one in focus. Citi maintains a sell on Coforge. Target price 4,550 from the 5,155 number which they'd given earlier. Downside roughly 9% from here.
Right.
They believe that revenue margins are below.
Yeah.
FY25
and
guidance
in fact,
is suspended.
Harsh, it's showing in where the stock has ended pre-open, at least 10% down on a Coforge. Very quick take from Kush. You said to stay away from Coforge. What if you're stuck at this point? What do you do?
Pray, perhaps, but then other than that, I don't. Stay put. I mean, I don't think you'll even get an exit if you have an F&O position.
Yeah.
But don't venture adventurous trades up.
Don't go near it. Very quickly, any top last sort of calls before we hit the opening rates?
Cochin Shipyard is looking strong, so I think that's one stock that traders and viewers can have on their radar. 1375, 1400 are the near-term targets that we're looking at, and perhaps a 1290 is a strong support zone, so should act as a stop loss.
Right. Well, I'm not sure if we have completely spoken about the auto sector with Vineet. Vineet, I want to talk about two-wheelers specifically in this case. Your observations, your valuations, and perhaps the best in the pack that your preference is when it comes to the two-wheelers.
So best in the pack is absolutely TVS, very strongly focused portfolio. Its portfolio has a very nice overlap with the EV portfolio. So, their modeling and styling is very contemporary. So I believe that, they will have a very easy run going ahead, followed by Hero Motors and Eicher Motors in that. So that will be my pecking order of the stocks to buy in the two-wheeler auto space.
All right. Kush, let me come to you on REC. This one has seen a surge. And in fact, it does seem like it's breaking out, from its previous highs at the moment on good volumes too over the last couple of sessions. Do you think that there's more legs to this rally?
Absolutely. It's just that what will happen is that the risk-reward ratio from here on will not seem as attractive for a trade. So a buy on dips for anyone who wants to enter fresh. But if you're holding this position, I think you should continue to hold. The momentum is fantastic, and as you said, the volumes in the last couple of sessions have been significantly higher from the last few months averages. So I think a good top comes in at 550. Hold on to the position that you're having. Ride this wave. The near-term targets that we're looking at, even after such a gap of opening, is 570 and 585.
Kush, a quick last call on Ajanta Pharma, if at all.
Well, range bound. I wouldn't say go out and buy just yet, but if you have, you can continue to hold.
Okay, Ajanta Pharma looking fabulous, at least in pre-open, and that's on the back of results. That's going to be the big factor this morning as we wait another 29-30 seconds odd for markets to open. The first thing that we need to watch out for definitely is what's happening with Bajaj Finance. It's had a great run pre-open. We're expecting a gap up. The question is that where do we sustain? Can we sustain above, those 22,700 rates that you've hit at least in pre-open? So it's looking like maybe set up for a good morning at the end of a tumultuous week and a truncated week as well. Once again, where the results hit and how the results are rewarded is what will be seen. So there you have it, the first rate hitting, and not bad at all. The Nifty opening about 0.5% up, as is the Sensex. Bank Nifty recovering after yesterday's downturn. I want to just pull up Nifty IT as well and see what's happening over there. Mid caps also doing fairly okay, and let's pull up the small cap index as well after the Nifty IT and see what's happening there. So you have about 0.5% up on all your key indices. Nifty IT is flat this morning. Let's pull up the heat map and see where the action is. And yes, we talked about Bajaj Finance. What an upswing between the two twins, Bajaj Finance and Bajaj Finserv. 6 and 4% up. Hindalco looking smart for another day. The Bajaj pack in that sense having a good morning. Bajaj Auto as well up in the green. But apart from those two, if you notice, not too much of an upswing. The sharp moves really on the Bajaj twins. At the lower end, also you have at the most a power grid, Maruti cooling off. You have some of those auto packs cooling off, but not massively, I would say. Even a Coal India, which otherwise not a great set of numbers, not reacting too negatively. So the market sentiment looking more positive this morning than anything else. And of course, Bajaj Finance, the star, 7% up now as we lead on. So that's the big story of the day. But a lot more, Agam, that we're seeing, on the broader end of the markets as well. What are the specific stocks on your radar?
Yeah, well, not too many. Not too much away, too far away from the new life high on the Nifty, and in the broader markets will continue to be focused on account of earnings as well. So let's pull up the list of all the stocks which are in fact reacting to earnings. Well, right at the top, of course, we will have a reaction from something like a Coforge, where the numbers have been disappointing, and well, it's taking a knock of around 6.5% at the moment. And Ajanta Pharma, on the other hand, is advancing by around 11.5%. Railtel, well, we're quite flat at the moment, but we clearly have already, of course, identified Coforge with the weakness and the kind of expectations going forward. In fact, rather lack of expectations, because, well, the company has suspended guidance going forward. And Ajanta Pharma, on the other hand, looking at very strong numbers coming in. Let's take a look at a handful of other counters as well. So, well, we do have Cint, which is looking at about 3.7% decline there, under some amount of pressure. Blue Star perhaps was a quarter which was on expected lines. And JBM Auto, that's something that again, we're looking at a 3.5% gain there. Again, a steady quarter, but a lot of that has also been priced in, remember, because of the kind of traction that we have seen with respect to the order flow coming in. Let's move on and talk about the other counters as well. And we have KEI Industries, again, flattish, but a fairly steady quarter coming in for KEI Industries. In fact, we have seen an operational improvement. Aztec Life Sciences as well, up around 1.7%, but Ugro Capital, look at that one, that's up around 7%. So another one of those counters which is actually standing out in trade. Well, moving beyond earnings too, there are two counters that we are tracking based on the monthly business update. So MOIL has come up with its production numbers, on the back of which it is advancing by around 3.9%. But remember, MOIL is also on a tear. In fact, it has momentum on its side. And IEX, where its monthly volumes have also been substantially better In fact, looking at a 17% uptick there. So that's another one of those counters which is in fact doing well in trade. All in all, Tamanna, at the moment, when it comes to the broader markets, the breadth is also favorable, more advances than declines. And I reckon that should this sustain, it'd be a good end to this truncated week.
Look at some of your, I would say, defense kind of names, your PSU kind of names. NHPC doing well this morning. Mazagon Docks was on our list and on our trade setup stocks, 2.5% up, nearly 3% up right now. They have two international orders, which perhaps is seeing that move. Sona BLW is doing well, so is Macrotech. Let me quickly go to Vineet and Kush for their first takes after market open. Kush, what are you really liking right now? And again, I come back to Bajaj Finance. The stock is having a completely fabulous morning. Would this be a situation to book some profits, or what would you do with the stock right now? Up about 6.5%.
I'll take the option A, book profits.
Yeah.
Because, if you see the highs that the stock made in September and draw a trend line from there, bang on, almost precisely, the falling trend line has been hit. And, from there on, we're seeing some sort of profit booking. So for me, this is going to still take some convincing to say that, we can go long on Bajaj Finance, at least from a positional standpoint. So anyone who's got, a profit in this stock should perhaps consider booking out here, if not completely, at least partially.
Just one more to Vineet again on Bajaj Finance and on the entire. Look at Chola Finance right now. Look at Shriram, HDFC AMC, Muthoot, ICICI Bank. Your top 6 gainers on the Nifty, all from this space. I'm just wondering if the market is seeing a larger sort of message here that the regulator is willing to review its decisions if they see action taken, and not necessarily taking 6 months to a year to do it. I just want to pull up Kotak Mahindra and see what's happening there, because Kotak Mahindra Bank has had a rough time, and even that is 0.5% up today. Yes, that question for you, Vineet.
So I believe that the inherent strength is very strong in terms of, your GDP growing. All your data points are very, very positive. GST is positive. So obviously the finance sector is going to perform, and we are seeing largely the entire financial sector participate with this rally. Specific to Bajaj and Bajaj Finserv, as I told you earlier, we would like to see some material numbers where we can say that the growth is back. And Bajaj is not priced for normal growth. Bajaj is priced for hyper growth, and the hyper growth numbers were kind of slowing down. So if the company can elucidate through actions that, the growth is back or the hyper growth is back, then only this kind of valuations can sustain. In the meantime, I believe that other players, Shriram Finance, also Federal Bank, came out with some stellar numbers yesterday, barring for the fact that, cost to income ratio shot up, but they've increased their employee count. Otherwise, it's a great number, great stock to look at, and I think that we could see some action out here.
As we speak, we're looking at the Nifty making a new life high at the moment. And of course, this is perhaps on expected lines as well. Vineet, before we let you go, a final question on Zomato. This one is once again approaching the mark of 200 rupees per share. Of course, a lot of expectations riding on the fact that there will be an improvement in the performance going in for the quarter gone by as well. Where do you stand on this one?
Extremely bullish. I think if you want to own a consumer stock, I think this is one to go with, primarily because they demonstrated significant traction in the quick commerce business, and they're extending even into the durable space. So just a flash in the pan was there. A couple of things with the Symphony ACs that they sold, or the PlayStation deals that they've done. So they've demonstrated remarkable ability to mine the adjacencies with scale and also with a frenetic pace. So I think that Zomato is going to turn out to be a giant killer for a lot of the adjacencies who thought they were very cushy in their space.
All right. On that note, Vineet, taking a moment to thank you for joining us and taking us through your views in the markets at the moment. While we let Vineet go, just a handful of more questions with Kush. Kush, the other stock on our radar is Action Construction. Now, what's really happened is that a few weeks ago, it saw a sharp knock. It again, recovered, and since then, while it has made a new high over the past maybe 2 weeks or so, it's consolidating. The question really is that at the moment, what levels would you watch out for a long? Do you think that it's a bit too late in the game to perhaps go along on this counter? If yes, then what are the risk levels on the downside that you're watching out for?
In fact, Agam, I believe that the current consolidation is perhaps a base formation for the next leg of up move. The stock has given phenomenal returns over the last couple of years. We all know that. And even if you look at the kind of up moves that the stock has seen, the stock tends to hover around the 20-day moving average, take some support, perhaps lifts a little further, lower. But from there on, the rallies are also equally sharp. I think this consolidation is perhaps, in anticipation of election outcomes, if at all. But I think this will prove to be, the launch pad for the next leg of up move. So I think this is a good point to enter, at least start accumulating at these levels. For me, a positional stop comes in, close to 1450 levels. And on the upside, we're looking at 1650. And if that is, as and when that is taken out, perhaps a 1700 also is on the card. So ACE, Action Construction, in our books has been a buy for a while, continues to remain so. I don't see a structural damage. In fact, this consolidation is healthy.
The call on the Nifty, the hero of the morning, is the index itself at a record high, Kush, at 22,780. What would be your call right now? You started by saying be a little careful ahead of elections, but stay long. Would you review that take after the kind of open we've seen?
Tamanna, that was 25 minutes ago, right? I mean, nothing much has changed in my view in the last 25 minutes. In fact, I maintain the fact that, if you've got a long position, book out and start your weekend early, then you get a day extra. On a serious note, the 22,650 to 22,800 is actually a resistance zone for the Nifty. If it does cross this, then perhaps 23,000 will be seen sooner rather than later. But, given the Friday effect and given that we are in resistance, also just to add that on the daily setup, we are seeing some negative, divergences, negative RSI divergences. So some profit booking might play out. So for the day, I think the bulk of the move perhaps is done. So I would take some money off the table. If I do get a slip of, let's say, 50 to 70 points on the Nifty, closer to 22,700, 22,650 also, I would consider buying. But other than that, I think for the day, I think, the bulk of the move should be considered done.
You are definitely in a mood to start your weekend early because that's the second time we've talked about. But what about on the Bank Nifty? Because the Bank Nifty is also a bit of a driver of this today, nearly a percentage up, a little short of, but about 300 points up. What about the Bank Nifty?
Absolutely right spot on. That is where the bulk of the money is still to be made.
Yeah.
We've seen a sharp run up on Bank Nifty, but if you see, a 12-month comparison, then the Nifty is up somewhere close to 26, 27%, if I'm not mistaken, and the Bank Nifty is up just about 16%. So I think what the Bank Nifty is doing actually is just a catch-up play. You can't have such a big divergence, on both the, indices. So I think there is still room for upside. As I mentioned in my opening comments, 50,000 is more of a psychological mark for me. The next level that I'm looking for the Bank Nifty is actually 52,000. There is a bit of a resistance of the upward sloping channel, on the Bank Nifty, and hence you're seeing the 49,500, 49,900 kind of zones acting up. But I think, come next week, we should see some sort of an up move here. Positionally, I'm looking at 52,000, as the next level for the Bank Nifty.
Can we pull up the constituents of the Nifty and take a look at where the pull and the push is coming, in fact, in today's day of trade with respect to the contributors on the Nifty 50? Let's take a look at where, in fact, there is, further pressure and where, in fact, that pressure is being taken over and what are the stocks that are, in fact, pushing the Nifty higher. So, naturally, the Bajaj Fin Twins will be right at the top of that list, as you can see on your screen there. Along with that is ICICI Bank. What we do have is further pressure in Kotak Mahindra Bank. We also have a little bit of pressure in Bharti Airtel and L&T. But, this pressure is hardly anything at all if you consider, in fact, just 13 or 14 odd points on the decline. And as against that, we're looking at 150 odd points on the up move. And that is how things are shaping up this Friday morning. The only hope for the bulls would be that this this positivity doesn't dissipate towards the end of the session. That said, at the moment, it is essentially the Bajaj Fin Twins and the ICICI Bank leading the gains coming through. Kush, my final question for you is on Kotak Mahindra Bank. A tough spot to be in. In fact, even in the long term, if you had invested in Kotak Mahindra Bank even back in COVID, you would have been sitting with a pretty loss or pretty profit of 0% at the moment. The way forward here for everyone who is potentially looking for an exit?
Well, now that the stock's actually gone solo, perhaps an exit for anyone who's holding may not make sense almost immediately. So I think you could continue to hold on. The stock might see some sort of, a revival, at least, from the oversold territories, which it is yet to approach, by the way. But as far as fresh capital deployment goes, don't take this as an opportunity. See, a lot of times what we've seen is the stocks tend to move higher when some sort of, a sell-off comes in because of the bad news. This stock was already under pressure and got beaten down because of that bad news. And, that's why perhaps we're seeing that extended, selling pressure. So in my books, for a fresh allocation, Kotak is still not on the radar. If you're holding and you're making losses, really, a bit of a spot here, but perhaps you could wait a little. About 100 points jump from here could be an opportunity to sell, but no fresh capital allocations suggested.
All right, thank you for that, Kush. Great to speak with you as always. We'll take a very short break, but on the other side, we have a slew of conversations. We're starting with Patel Engineering. We're talking about their fresh QIP launch and what they plan to do with that money. All of that after this short break. Welcome back. You're watching India Market Open, and while markets are off to a positive start and fairly strong start, actually lifetime highs on the Nifty, we're focusing now on specific companies, and Patel Engineering on our radar this morning. Rupen Patel, Chairman and Managing Director, joining us now. Mr. Patel, a very good morning. So we're talking about your 400 crore rupee QIP that you've closed, you've launched recently. Let's start with what are the plans with these funds? Where is the focus on this fund allocation?
See, the fund allocation will be towards working capital and part towards reduction of debt. We have been consistently reducing debt. Last year, we reduced debt by 200 crores. This time, we target to do the same. Our industry is right now facing a boom, primarily the hydro sector where we specialize. And we expect very, very large works just after the elections, because the government has doubled what it plans to build in terms of hydro projects over the last 70 years is being planned in the next 10 years. So you're going to see huge amount of projects come up. So what you see is the company preparing for the working capital for upcoming projects. So over 50% of the money will be used for capital expenditure for these projects.
Mr. Patel, in terms, I just want to take that point forward, where I think you're essentially shoring up the dry gunpowder ahead of the next capex boom post-elections. Now, what are the kind of timelines that you see? Because you're going to have, election results June 4th, new government coming in, then a budget. Do you see all of this coming in towards the end of this calendar year? Or where do you see a lot of this new set of projects being apportioned?
I would see that the bidding would start somewhere around August. The bidding for the large projects in the hydropower sector would start around August, because the government outlay for this year is 11.5 crores, which has to be spent. 4 months are going to election and results and appointment of the cabinet. So you would see a huge plethora of work come up just after the elections, 1 month after the elections are over.
Patel, if I can, come in on, your plans going forward. Now, you already suggested that the government will start coming up with a lot more in terms of influx of projects post the upcoming and impending budget as well. You also mentioned that there will be a lot more in terms of order flow. Based on that, I'd reckon that your capital requirements will also increase. And considering that, since you are already raising funds through a QIP, perhaps 3 months or 6 months down the line, with your requirement and anticipation of an increase in working capital as well, do you think that there could be a chance that you would need to raise more funds via debt or equity?
No, the company strategy has been to reduce debt consistently. If you look at the last 3-4 years, we have been reducing debt from the sale of non-core assets, primarily from about 150 crores to 200 crores per year. So we do not plan to increase debt. In terms of working capital, what we have done now is we have prepared for the future, the amount of work that is going to come. So we have planned what you see is the company planning in advance, as opposed to getting the work and raising the capital. The company has risen its employee strength from about 1,500 people to about 3 years ago, about 4,500 people. We have implemented SAP so that controls can be better. So what you see, and even financially, so what you see Patel Engineering doing, the company doing, is management-wise, finance-wise, prepare itself for the next 3 years. So I think we are good for the next 3-4 years. We will not require I don't believe that we will require additional working capital, either in terms of debt or in terms of equity.
Mr. Patel, if I can also come in on your current order book, where does it stand? I'm not asking you for your earnings, but in terms of execution of the order book, how much of your current order book would you expect to execute in FY25 going in?
The order book is around 19,000 crores with the aging of about 4.5 crores. So based on the current order book itself, you will see the company grow at around 10 to 15% per year. That means if Patel does not have to take more work, even on the existing order book, it can grow at 10 to 15%. So what you will see, the current order book going into play, we will grow at 10-15% the coming this year. And then you will see the order book really coming into play, and we should grow at around 25 to 30% in the coming years.
Mr. Patel, I know we can't really talk about your numbers yet, but I was just, wondering and wanted to get a sense of what's happening with your margins. For your 9-month performance, everything looks good. Net profits have been up significantly, nearly 100%, but that margin squeeze sort of remains. And I want to understand if that's systemic or something that happens in this business. Do you see margins improving? You can't give me a number, I understand, but what is your outlook on margins?
Yeah, see, as we go on, as we become bigger, the turnover increase, economies of scale will come in. As we reduce debt, margins will automatically improve, net profit will improve. In terms of EBITDA, we have been consistent at 14-15%, and that will continue in the upcoming years. I don't see them going down. I would probably see them either stay stagnant or improve.
Any kind of outlook you can give me on EBITDA and margins?
On EBITDA, 14-15% will be consistent, so that will continue. In terms of profits and turnover, we clocked about 3,200 crores a year before last, and a profit of 154 crores. This year, in the 9 months, we finished about 3,200 crores and a profit of 140 crores. So I think that is only up, it will go north.
In terms of number of your ongoing projects, we have 48 state, central and international business, 48 ongoing projects. What is the breakup there, and what number do you see those number of projects improving to?
Core competency has been tunneling and hydropower projects. 75% of our order book is tunnels and hydropower projects. About 75% is hydropower and tunnels. About 20% is irrigation works, and the rest is miscellaneous works like roads, buildings, etc., etc. I would say that we would keep the hydropower sector at around anywhere from 65 to 75%, and we would expand on irrigation or hydropower. So combine the two, we would definitely keep it up to maximum to 80%, 80 to 85%.
All right. Mr. Patel, your expectations, well, I know that this would perhaps be preempting, but should we see the incumbent stay in power? Your expectations from the upcoming budget, because the Prime Minister seems to suggest that there could in fact be more Big Bang reforms in play should the government come back in power. What's the way ahead? What are you making of? What are you hearing on ground?
If I look at the Prime Minister's vision of becoming the third largest economy, some considerable amount of money will be spent on infrastructure. And I would see a lot of SOPs for green energy, primarily hydro and solar, in the upcoming years, at least in this budget, and a lot of government spend in these areas.
Thank you so much, Mr. Patel. Great to speak with you. Patel Engineering there on their outlook, and they expect new bidding to come in from August after the new government is settled in, cabinet has been announced, etc. So that's one to watch out for. Meanwhile, let's turn our focus to markets. Have hit a lifetime high. On the Nifty, how close are we to 22,800? Not that far, actually. Pankaj Murarka is joining our CIO Renaissance Investment Managers. Pankaj, very good morning. Always great to speak to you as always. What do you think has been the big booster for markets? Is it that a fairly decent corporate results season, or now once you have phase 3 of elections coming in, you know that kind of a momentum will also grow?
Morning, Tamanna. So I think what you said as rightly, Tamanna, that we've had a fairly decent set of earnings. Now we are almost past mid-cycle of the earnings season, where most of the large companies have reported, and we've seen fairly healthy earnings from them. More importantly, the outlook continues to remain strong. So I think what is driving market at one level is clearly a very strong underlying resilient economy and a fairly optimistic outlook for the growth going forward as well. More importantly, I've always said that we continue to remain in bull markets. India is probably an outlier economy in a world where growth is challenged, and given that we can still do low double-digit nominal growth, and mid-teens kind of earnings growth, I think in a bull market, markets will give positive returns year after year. So I think directionally, the outlook for markets continues to remain positive. As you rightly said, election outcomes in India is considered to be a certainty, given election are completely lopsided at this point, this time around. So I think markets are already baked in a incumbent government coming back to office, and that also helps the market momentum.
I think even this announcement this morning that the Gandhis have pretty much given up on Amethi could have had a sentimental boost, because that's, like waving the white flag in what was once your bastion. But having said that, Pankaj, I wanted your take on what has been firing up the markets today. And it's not just Bajaj Finance, it's the bank Nifty, it's that entire space, the banking financial space. Is there also a sigh of relief in terms of how quickly, in relative terms, the regulator has lifted the restrictions on Bajaj Finance? Is that what we're seeing?
Yes, so in case of Bajaj Finance, I think last evening the regulator lifted the restrictions, so that has been a positive news flow which is popping up the stock this morning. But I think it also gives us a message that it's a regulator which is somewhat different than what I've seen for the last so many years. It's a regulator which is far more proactive. It's a regulator which is far more conscious of the risk in the system, and it's a regulator which is far more agile than what we've seen in the past. And I think all of that is pretty positive for the system. As far as banks are concerned, I think we've had pretty decent earnings season from the banks, and the demand for loan in the system continues to remain strong. Bank as a sector has underperformed over the last year. So valuation in the sector has become extremely compelling when we look across sectors within the market. So my view is larger banks and banks which can deliver decent growth should do well going forward from here.
Yeah. Would you prefer your public sector banks to private banks? Is that theme still sustaining in your view?
Absolutely. I think state-owned banks, if you recollect over the last, except for the last 1 year, they've been beaten down very badly. So the starting point of rally in state-owned banks was very low, because most of these banks were trading at valuations which are more like 0.3, 0.4 times price to book. Well, we've seen significant re-rating in these banks, but the good thing is that now when you look at these banks, their numbers are pretty robust. Most of these banks are doing ROEs on top of 1%. They've already started doing mid-teens kind of ROE, which are pretty healthy, and probably do a mid-teens kind of earnings growth as well. So I think still valuations are extremely cheap. If you compare it with the previous cycle, I'm going a slightly little back in the history. In 2007, when state-owned banks did well, most of these banks were trading at 1.5 to 2 times price to book. So they still have valuation room when we compare to the previous cycle. So I continue to believe that state-owned banks will keep participating in this rally, and probably some of them will actually outperform private sector banks from here as well.
Speaking of valuations at the moment, and I reckon that rotation continues to happen from time to time in all sorts of portfolios. But in the portfolio that you'd probably look in an ideal one, in what sectors would you look to perhaps book out, and in what sectors would you perhaps want to increase your allocation going in?
So, Agam, we have continued to remain positive on domestic cyclicals, which includes autos, cap goods, has been a big overweight for us for the last 2.5, 3 years, and that continues because I think the underlying growth in the sector continues to remain very strong. We are seeing strong investments by the government into the infrastructure sector, and probably we are at early stages of revival of private sector investment cycle. So I think the outlook for that sector continues to remain very strong. Apart from that, as I said, we like banks, and we also like healthcare as a sector, because last year the sector has done well, but it's still early days. I think we are in a long cycle as far as US generics price stabilization is concerned. So I think pharma as a sector will do well. One sector which we've been underweight almost now for last 2 years is actually consumers. One, valuation in the sector is extremely rich. Last year was a sharp slowdown in consumers across the board, and it got accentuated because of poor monsoons probably. So we should have a cyclical recovery in consumers in the second half of the year, but we still think valuation in the sector in context of the growth remains very rich.
Okay, Pankaj, we'll leave it at that. Thank you so much for joining us and taking the time out for a quick call on that valuations and market check. Of course, that's Pankaj Muraka telling us about how he is approaching markets here on, even as the benchmarks make a new lifetime high. And on that note, we slip into a short break. And on the other side, we get your conversation with Cint. Stay tuned in. You're watching NDTV Profit. This is India Market Open. We're taking stock of earnings from Cint. Well, it's been a quiet quarter. That's possibly how we can perhaps qualify the Q4 earnings for the tyre maker, and the tyre major, in fact, where we're looking at a revenue growth of around 4%. Its EBITDA margins, sure, they have expanded to going over 13%. And net profit, on the other hand, has declined, but that is on account of an exceptional item. Well, to talk to us about the quarter gone by and what we can expect going forward, we are in conversation with Kumar Subbiah, the CFO of the company. Welcome to the show and thanks for joining in. Well, my first question is to do with the kind of volumes that you're seeing as far as the quarter it's gone by. What are your observations here? Because we do see a substantial pickup overall in the automotive space. Is that something that is going to eventually translate into the coming few quarters? What's your observation here?
Now, as far as last year is concerned, we managed to grow in two of the three business verticals. We grew very strongly in the international business. We grew in mid-single digits in the replacement business, and the OEM business was kind of flat. Okay, and regarding your question, relating to how we see ourselves, the market looks, there is a momentum in the market, particularly in the replacement market, and we see lots of opportunities in the international business. And we lost some volumes in the OEM business based on our own plan. We expect some recovery. So we expect, to see some growth momentum starting from current quarter onwards, and we would be participating in that growth. Okay, and we would be delighted if we could grow faster than the market.
Right. Well, in that case, if you could also give us an idea on the current rubber prices, because what we're observing is a little bit of an inch up there. What sort of an impact could it potentially have on your operating margins going forward? And what sort of a lag effect does that have when it comes to incorporating that in your pricing?
See, rubber prices were hovering around 150 rupees per kg in the Indian market as well as the international market till November of last year. And since then, there has been a gradual upward movement in the rubber prices. As we speak, it's hovering around 180 rupees per kg. So therefore, it will have impact on our costs, and therefore, if the realization remains, it will have some impact on margins. And even on petrochemical derivatives, where the crude plays an important role, except in the last 2 or 3 days, otherwise crude largely hovered around $90, closer to $90 level, and that has had some impact on crude derivatives. In general, there is a lag of up to 3 months. Over a 3 months period, any movement in the raw material prices progressively impact our costs. So therefore, we expect our raw material costs to move up by about little over 4% in Q1 versus Q4. And our intention is to neutralize this through some price increase as well as through cost efficiencies that we intend to execute during the quarter and beyond.
Good morning, Mr. Subbiah. Tamanna here. Just wanted to come to you on the net profit number and this exceptional expense of 58 crores. Because while margins and EBITDA, etc., were in the green, net profits have been down 22%, one assumes, because of these exceptional expenses. What are these? Are these the EPR-related provisions? And what is sort of the timeline of this?
Now, there are 2 items in the exception list in the Q4 numbers that we have reported. Approximately about 8 crores in that exception amount is on account of some voluntary separation scheme that we launched in one of our factories. So, and therefore, that contributes about 8 crores. Balance is the provision that we have made towards extended producers responsibility notification that was issued by the government in 2022-23. So, and we are calling it out as an exception because this amount pertains to the year 2022-23. In addition to that, we also have recognized the cost in our own normal expenses, large part of it in Q4. So these EPR regulatory changes in terms of manufacturers will have an obligation based on what was produced 2 years back, either to recycle tires or go and buy certificates from the recyclers.
If I may ask, Mr. Subbiah, so if you say 58 and out of 58, 8 crores is employee VSS voluntary separation costs, so about 50 crores for the EPR segment. When does this liability end?
No, liability is not an end. So it's about 36 crores is what is there in exception relating to EPR pertaining to the earlier year. It has just begun and it will be there in the cost base from here on. So
it will be a recurring sort of expense here on. What would it be on an average per year?
Okay, it all depends on the value of amount of money that we incur for buying those certificates. It could be up to about a percentage of our selling price at a company level. Okay, so if it's 38 crores, this is for FY23. What period is 38 crores for? And for FY24? FY24, it's almost double the amount. So for FY24, it will be about 70 odd. Double the amount, about 70 odd crores. And when will this have to be accounted in? So you have a two-year gap, is it, to account for this? Yeah, it has already begun. Okay, in the year 1, it is about 35%. Year 2, it is about 70%. Which is current FY24. FY25 onwards, it's about 100%. So therefore, and the amount would be higher in FY25. And from there onwards, it will sustain. Sir, what is the amount in FY25? FY25, we expect it to be about 1% of our turnover, overall basis. That's what the impact would be in terms of that. So it could be closer to about 100 crores.
Okay, thank you, Mr. Subbiah. We've run out of time, but thank you so much for speaking with us. That was really the key takeaway, and perhaps why you're seeing the stock a little depressed today, because all things considered, this EPR cost is going to now be a standard feature for tire makers and for CEAT, and for FY25 it could go up to about 100 crores. That's what the CFO just told us. We'll take a very short break, but stay tuned. On the other side, Ramkrishna Forgings speaks to us about their numbers.
Hi, good morning and welcome to NDTV Profit. We're joined by Mr. Naresh Jalan right now with the Managing Director of Ramkrishna Forging. We're discussing the back of the Q4 earnings, which were reported by the company, and a strong show shown by... Currently, the company showed a really strong revenue growth of roughly 15 to 20%, while on EBITDA, and here was the key numbers, of roughly 22% the company has clocked in. It has maintained margins as well, coming at roughly 200 crores of EBITDA, while PAT was up roughly 31% compared to the previous year, coming at roughly 87 crores. Now, do know that the company has been in the news on the back of mergers of its subsidiary with itself, while it has also, put up a new facility in Mexico. So we'll be talking about all of this and more with the management and with Mr. Naresh Jalan. I'll just check if if the guest is already logged in. Yes. Hello, Mr. Jalan. Good morning, and thank you so much for joining in today. Let me just start off with the numbers. The strong EBITDA profile maintained by the company. Could you just run us through the basics of how Q4 panned out? And what is your expectations for financial year 25, if not on numbers, just how you're seeing the industry as well?
I think Q4 has been extremely strong in the backdrop of the geopolitical issues as well as the domestic commercial vehicle downturn. And going forward, I think we expect to at least have a 15 to 20% volume growth going forward into FY25.
Got it, sir. And you have in this particular, I wanted to start off with talking about the Vande Bharat order also that you received in this particular quarter. Is this part of the JV with Titagarh? And if there is any commentary on how do you see this JV with Titagarh also panning out going forward as well?
I think the Vande Bharat order is not a part of JV.
Okay.
It is our own RKFL standalone basis, the manufacturing of the underframe which we have received from BHEL. BHEL is under a consortium with Titagarh, but the order has been received on a standalone basis. And the joint venture which we have with Titagarh, which is known as RKTR, is the wheel project which is being set up in Chennai.
And is the investment of this particular green project already complete, or is it ongoing in this particular financial year as well? Because I know that the company in its presentation has given a detailed guidance on investment going forward as well as the capex plan. So is this going forward, is this completed, or is it going to be some component as part of the investments as well for financial year 25?
This is part of our investment, and I think we have mentioned in our presentation. Last year, we have invested close to around 62 crores in this investment, and total we envisage around 240 crores of approx investment in this going into next 2 years, as a part of equity, and balance is going to be funded by Titagarh and as well as debt for completion of the project.
And do you expect any such more orders also coming in from the Vande Bharat segment for Ramkrishna Forgings on a standalone basis as well?
Yes, I think the current order which we have received is only for 32 train sets.
Correct.
The total private sector order is close to 200 train sets. So we have in October we will submit the samples for validation, and we hope that once the validation is complete, we will have an opportunity to service the industry for entire 200 train sets.
Understood, sir. And what is the kind of competition that you're seeing in this segment? Do you see other forging players in this segment, or is there any other players who service in the auto industry who also compete in this particular order?
No, I think none of the people in the auto segment compete us in this order. I think there are other people who are there in this segment, but they are not part of the auto industry.
Understood, sir. Now, I just wanted to take some move a little bit global. I think the share of revenue, I think between Asia is roughly around 59 to 60%, as well as North America and Europe is also a substantial share. The company has also put in a new plant in Mexico in this particular financial year. I just wanted to ask, firstly, will you be servicing a lot of North American clients from this Mexico plant? And over the next 1 to 2 years, where do you see the share of revenue of North America as well as Europe move from here?
I think this Mexico facility is not yet set up. It is in process, and I think in next 3-4 months the setup is going to start. And I think we are looking at almost only 8 to 10 crores of revenue from this plant. But next year in FY26, we are looking not significant revenue. And this facility is primarily being put to cater to the passenger vehicle and the local manufacturing out of North America.
Understood, sir. And could you also just brief us about what are the EV plans the company has been doing? I think you had mentioned in last year that, if I'm pronouncing it correct, you had a 51% stake in Suyo. Apart from that, and including this, if you could just summarize what the company is doing on the EV front. We've seen a lot of auto component makers, starting making parts already and putting in the EV plans. For Ramkrishna as well as for the industry, how do you see with the evolving landscape of electric vehicles for passenger vehicles as well as two-wheelers, if anything? Could you just guide us on that as well?
In EV, we are migrating slowly but steadily into EV. And I think we are looking at in next 3 years a double-digit growth from EV in our balance sheet, and primarily driven by two-wheeler and four-wheeler market. And some part of it is going to be from the light commercial vehicle. So we are building up a pipeline of orders, and I think you will be able to see this in coming quarters and months how this shapes up.
Got it, sir. And I think you had mentioned that the equity commitment for Titagarh over the next 3 years, I think from 64 crores to 100 to 113 crores as well. Could you talk a little bit about the kind of orders that you're going to go for here, and any kind of, if not quantification, how do you see the space evolving? Could you let us know a little bit about that as well?
No, in the wheels project, we have already bagged an order from Indian Railways.
Yeah, correct.
Chilling of 80,000 wheels per annum, and there's a take or pay kind of agreement with the railways up to 2047. While it is only 80,000 wheels which railway has guaranteed, but with the infrastructure growth and the railway investments in modernizing railways, we feel that there is going to be huge domestic opportunities in the wheel project, as well as there is a huge opportunity globally also. But right now, we are not filling in any orders because this project is going to be up in production by end of FY 2026. So we would wait for right opportunity time to start filling up the orders. Our first and foremost want is to start manufacturing and delivering wheels to Indian Railways.
And so just one quick 20-second answer if you can squeeze in. You had a QIP which we raised for 1,000 crores. You have informed the exchanges of utilization of this, and I'm guessing this is for the paring down of debt. How quickly do you see over the next few months or the next quarters to finish paring down the debt, and what is the kind of the timeline for this, if anything?
No, I think we have already given a detailed statement of the cash flow in our presentation, which clearly states the current debt status and what is going to be likely in FY25 and FY26. So our statement in the presentation is extremely clear in terms of the overall debt management and the utilization of the QIP proceeds.
Say no other fundraise over at least till FY26 on the equity side?
I think we are not looking at any fundraise with the current cash flows.
Got it, sir. All right, sir. Thank you so much for joining in today and running us through all your numbers and being so upfront with all the answers. We will be talking to you soon, as well as for the next quarter as well. Thank you so much for joining in today. So this is time for a quick break here. We'll be back with a lot more. Stay tuned to NDTV Profit.
Welcome. This is NDTV Profit. You're watching Talking Point. We're in conversation with Gautam Shah, founder and chief strategist at Goldilocks Premium Research, who's joining us on the show. Gautam, good morning. Thank you so much for joining in. And no better day to have you than on a day when the benchmark is making another lifetime high. Well, Gautam, at the moment, the Nifty, well, it's trading at wherever it is. The way forward, what is your assessment here?
Good morning. Thanks for having me. Well, I think for the last 4 months, we've gone through a lot in terms of local and global developments. And despite all that, you have the Nifty coming back every single time. And I think the test of character is really in difficult times, and the manner in which the indices have handled the difficult times in the last 6 months, I think is quite commendable. And I think, as we keep saying, liquidity plays a very important role in protecting the markets. So I think the setup is still quite strong. The leadership is returning. The momentum is back. Participation is excellent. And there seems to be a musical chairs within the index heavyweights, because there was a time when the IT sector did so well and kept the market higher. It has taken a bit of a backseat. And now you see the banks coming back so strongly in the last 15 days. And that's really propelled the Nifty to levels of 22,700, 800. But if you really look at the Nifty itself for the last 4 months, it's been in a sort of a band. So 21,800 on the downside, 22,800 area on the upside. There have been a few attempts to break out and break down, but they have really not worked. But in this period, stocks and sectors have done exceedingly well. So I do believe that if the Nifty is able to get past this 22,800, 23,000 area, which is an important resistance based on multiple studies, you could see the next big move on the Nifty. But till that does not happen, it's just best to stay with specific sectors and stocks and ride this market without really overanalyzing and without looking at the day-to-day action.
Gautam, you spoke about rotation within the Nifty and you also spoke about the strength in banks. What's surprising is that the banks are showing a little bit of strength despite slackness from the largest of them all, HDFC Bank. The way forward here, because I reckon that it will still have to play an important role in the Bank Nifty overall in general, even though ICICI and Axis Bank are pulling their own weight. What is your assessment on the Bank Nifty and the banking constituents?
See, yes, as you rightly said, HDFC Bank has a huge bearing on the Bank Nifty, and that was one reason why the Bank Nifty did not do as well. In fact, even Kotak Bank, given the news flow of the last 1 week, but with the comeback of ICICI Bank, I think that's pretty much made up for the underperformance of the other two banks, and that's probably the reason you have the Bank Nifty now at the doors of 50,000. So I think the trend is pretty solid. Kotak Bank, any which way, has been an underperformer for a couple of years. HDFC Bank does not have much to lose. I think at some point of time, appreciation will come, but there is not much to lose. So I think in that sense, the Bank Nifty is protected. But within the Bank Nifty itself, I think our top picks have been ICICI Bank in the private banking space and SBI in the PSU banking space, which has been an absolute favorite for almost 6 months now. And we do see both these stocks delivering supernormal returns even from current levels. On the Bank Nifty itself, I think once the level of 50,000 is cleared, which is a psychological and a technical barrier, you could potentially see a move towards 50 to 500. But the way the banks are placed, I just get the confidence that the Nifty is still in fine form. And if Reliance were to start contributing, that would be the icing on the cake.
Gautam, I just look at the India Volatility Index, and what I observe is that the index is not as substantially high as one might expect in election season. It may potentially also indicate, certain perhaps foregone conclusions. But in your opinion, under such circumstances, given the kind of environment we are in, of course, we are in election season, going in, what is your observation based on experience, given the fact that the benchmarks are near lifetime highs or are at lifetime highs, and the India Volatility Index is not substantially high in comparison?
The low volatility has been a characteristic since COVID hit us. I think since the time Nifty started rallying from 7,500 levels in March 2020, you've had an environment where volatility has been low, corrections have been shallow, and I think that's the new normal on account of liquidity. But if you really look at elections and the expectations, and if you compare it with the past, I don't think it's comparable, because when have you seen in the last 25 years that we run into elections with 19,000 crores of domestic liquidity coming in every single month? And in some sense, I think everyone has a view that the election is a non-event. So I don't think the market is very concerned about what's likely to happen in the first week of June. Having said that, definitely there could be some volatility. And as I keep telling my clients, it's life before June 4th and life after June 4th. So you don't really plan too much, in advance. I think the market should remain in good shape. We have our own positives apart from elections, which is playing out beautifully. And volatility, I think, is not a factor, because still the India volatility index is between levels of 11 and 16. All is fine. It's only when it starts moving above 16 is there a problem. So I don't see that happening anytime soon.
Gautam, you did suggest that there are plenty of positives beyond just the election which are playing in favor of the markets at the moment. What are those? If you can, help us list them.
Well, sometimes price action takes over everything. So I could talk about fundamentals, I could talk about earnings, I could talk about India's demographics, India's valuations, and the sweet spot that India is in comparison to world equity markets, because we are still one of the best performing markets in the world. And if you divide India by the rest of the world on the ratio charts, you will see that we have been in an uptrend for the last 3 years. So I think all our positives are there. I think some quarters in the market have raised that we are overvalued or we could be in bubble territory. I don't think that's true, because if you look at the historical valuations, we are slightly above mean and we are nowhere close to bubble territory. And with the earnings pickup of the last couple of weeks, and we saw the GST collections in the last couple of days, all of this just speaks volumes about the confidence the Indian market trend has. So I think put all of it together, it does seem as if this bull market will continue. There could be short, sharp corrections from time to time. We have seen this, but you have to stick to quality. I think that's the key message to your viewers, that in this market, anything that's substandard gets hit very quickly. So stay with quality, and I think your portfolio will be safe.
Gautam, let's talk about sectors beyond just the Nifty and the Bank Nifty, and one of them I want to touch upon is metals, which of course follows the commodity cycle in general as well. But there has been a little bit of resurgence of late. Your observations here, perhaps ideas that you like in this particular sector.
Well, metals has been our favored sector for almost 4.5 months now. In fact, we caught it very early because we got the indication on the charts, on the ratio chart, that things are changing. And thereafter, it's just been, one step higher, every single week, because stocks have participated well, fundamentals have picked up. Now you hear about all the tailwinds, the China factor is kicking in, and you have smart money, which is aggressively into some of these metal stocks, which are not overly valued. I know they are considered cyclical in nature, but right now I think they are structural is what we see. And I do see, looking at the ratio charts, that the metals index has the potential for another 10 to 15% upside from here. So all the top stocks, right from JSW Steel to JSPL, Nalco Sale, which we've covered multiple times in the past, Tata Steel are looking good for 200, Vedanta, which we covered in the past, and looking good for a lot more. So I think this entire space has caught the attention of market participants, and with the fundamental tailwinds coming in as well, I think it's a sector where one should stay committed. So while auto, banks, pharma, chemicals also look good to us, but you need to have a very serious allocation to metals.
Gautam, the other sector which has been a quiet mover of late is the pharma sector. And again, there are a handful of names in the sector which just continue to move gradually upwards and don't even show that much volatility while they advance and they continue to advance. Your view here?
The pharma again has been a favorite sector for a year and a half now. I mean, look at the trends that you've seen in the pharma space. Look at Sun Pharma. Every single week has been a higher high for a very long time. Look at the movement in Cipla, Zydus Life, and now with Divi's Lab and Laurus Lab coming back, I think the pharma sector is also in a sweet spot at this point of time. In fact, as we speak, we are almost at lifetime highs, I think, and we are coming out of almost 2 months of consolidation. And if the breakout does happen, you could see another 8 to 10% upside, for the pharma index. So it's a sector where you stay committed. It's low beta in some sense, because in difficult days for the market, it doesn't fall much, but in good days of the market, it does well. And I think all the top names, including Dr. Reddy's, we like, and we feel that, one should stay invested in them.
Right, Gautam. The other thing that I wanted to also address was the broader market indices, which continue to advance even in this financial year. I know we've just been about a little over a month in this financial year. Of course, in the previous financial year, we had continued to see that huge outperformance from the small cap index specifically, that was followed by the mid cap index. The way forward here, do you think that that trend could likely continue moving into the next few quarters?
Well, honestly, there are no indicators, because if you overanalyze in the mid caps and small cap space, you will miss the party. I think that's been the case for a lot of people in the last 3 months, because every time you thought that, okay, now the big correction is coming, you had a shallow, a dip, and then, all the quality small caps and mid caps came back strongly. So even now, I think the setup is pretty strong. They are at lifetime highs. They continue to outperform. And mind you, in the last 4 months, the Nifty hasn't gone anywhere. We started the year at 22,000, so we are 3.5% higher. But if you look at the mid caps and small caps, they continue to maintain a series of higher tops and higher bottoms. So I think this mid cap, small cap outperformance is here to stay, and I think is likely to stay for the rest of this year. But stay in the top quality mid caps, because that's where the money is flowing in every single month. So the handful of 50, 60 quality mid caps, small caps is where the real focus is, and I think they will continue to outperform over the next 6 months.
Right, Gautam, for fundamental reasons, the IT sector is clearly out of favor at the moment. Your observations and your opinion, at what point in time do you think that it will make for a significant, lucrative bet?
See, the whole of last year, we were quite a bull on the IT space. In fact, we played the entire rally in mid-cap IT. And thereafter, a couple of months back, things just changed gradually. And we managed to identify the same, and we pretty much went overweight into the IT stocks. I still like them from a longer term perspective. If somebody's looking at 12 to 36 months, I still like a TCS and HCL Tech Mahindra, and I think they can do well. But, mid-cap IT has been very richly valued. So you can't be committing into them. And I think smart money has moved away from this pocket to some of the other pockets. And obviously, there are some global challenges that we are facing, and this whole debate whether AI is going to disrupt the IT industry worldwide and India, I think that's a very valid debate as we speak today. But right now, I think it is out of favor. In this market, you don't touch underperformers. So simply stay away and focus on the other pockets.
Okay. And perhaps a final question then, Gautam, if I can take this one up for you. The auto sector. Again, a little bit of resurgence playing out for fundamental reasons. But your views when it comes to charts here?
Well, it's seen a phenomenal move. I mean, you look at the charts and you realize what a great move the entire auto space has seen in the last 1.5 years. I think it is still going strong. It's just that there is some sort of musical chairs here as well, because Tata Motors has taken a bit of a breather, whereas Maruti, Eicher Motors, Escorts, Ashok Leyland have now started to do well, and I think they will continue to see further upside. So you have to be stock specific. You can't buy anything and everything in auto. And the other space that we like, and I think we didn't speak in detail about it, is chemicals. I think chemicals is making a very strong comeback, and this breakout is here to stay. So we see immense alpha being created in chemicals over the next 3 to 6 months.
Would you like to make a few names here in the chemical space, Gautam?
At Goldilocks, we like to stay with that absolute top quality. I think that's what we do, fundamentally strong and technically strong. And having said that, I think SRF, Deepak Nitrate, Gujarat Fluoro, and Aarti Industries are our top picks, and we see them doing very well.
Fair enough, Gautam. We leave it at that. Thank you so much for joining us and taking us through your analysis and views on the markets going forward. Well, there you have it. That's Gautam Shah telling us about the current state of the markets and what we can expect. And on that note, we are out of time on this edition of Talking Point. But on the other side of this break, we get you the F&O show. Stay tuned in. Benchmarks lose gains after staging a sparking rally to scale fresh record highs in early trade. Sensex trades at 74,500.